Hello guys, welcome back to my channel. Today I'll be sharing with you a simple breakout strategy which is very effective. It has been tested over years and this has worked, especially with these four chart patterns that I'm going to be showing you here on the chart. All right, so take a look at this. All right, the first one is the bullish pennant chart. Okay, chart pattern. It's a chart pattern and it's very effective when you identify it on a higher time frame. All right, say 4 hours, 1 day, 1 month. If you identify this on a higher time frame or even a 4-hour time frame, when you identify this bullish pennant chart pattern, it's very effective breakout strategy. Okay, so take a look at this. We are going to see how this looks like. All right, a bullish pennant looks something like this. Okay, it has to be in a trending market. This does not work in a consolidating market. All right, so it looks something like this. All right, okay, this is a bullish pennant. Your bullish pennant looks something like this. It has to be in a bullish market. Okay, it has to be in a trending market that is trending upwards. There has to be bullish, either bullish or bearish, but right now we are looking at a bullish pennant chart pattern, and we will see how the breakout strategy works here. So when you identify this, and how do you identify this? You look at where price has bounced off, more like support and resistance. A pennant also has this is what they call a pennant. Looks like a triangle kind of, all right, but it has this arm here, all right, so showing that it's actually a bullish, it's moving upwards. All right, so it has its own support and resistance. So this upper line, okay, trend line of the pennant is its resistance. So you would have this kind of movement, okay, and a rejection down, also up at the resistance there's a rejection, and then there's another rejection here. Okay, so you'd be having a movement like that, a formation to the upside like this. Okay, so you'd have a first touch here. This is a first touch. Okay, this is a first touch and rejection downwards. This is another touch down here. This is another touch here and a rejection downwards, and then this is another touch down here, and then it continues upward. This is another touch over here. So this a pennant resistance up here. This would be the resistance of the pennant up here. This line here is the resistance. I'll color code that red. Okay, and then down here would be the support. I'll color code that blue. Okay, so this is the support trend line of the pennant, and then this is the resistance trend line of the pennant. All right, in a bullish trend. Okay, so we are looking at this kind of formation. Okay, so what we are anticipating now is for price to break above here, okay, and form a new high price, and we are waiting for the retest of that area, of that breakout, before we can place our buys all the way to the upside. Okay, target a 1 to 2 risk to reward ratio. This is what we are anticipating here. Okay, the price, let me just extend this for the sake of our learning. I'll just change this to this. Okay, this is our resistance line. This is the previous price. Take a look at this here. This is the previous price. It has been broken to the upside. This is a new high price over here. So we'll indicate that area. It has been broken and there is now a new price over here. Okay, take note of that. That is very important. This is a new high price. New high price. Okay, a new high price over there. It's higher than this one. Okay, so this one has been broken. This one over here, this one, it has been broken, and now we have a new price over here. When that happens, then we will wait for our price action to return here, retest these areas of breakout, okay, before we can watch for our candlestick patterns on the lower time frame, like bullish engulfing candle, confirming our entry to the upside before we can place our trades. Okay, that is how you would trade this breakout. They call it this is a breakout strategy because there is a breakout of the pennant here. There is a breakout here. It has broken out of this resistance and is tending upwards. So we are looking at, this is a breakout over there. So that is a breakout here. So it is going to the upside. So we'll place our trade after the breakout, okay, to the upside. All right. So watch out for this kind of formation, especially on higher time frames. This is very effective. You place your trade there and your stop loss just below the breakout area here inside your pennant, and target a 1-to-2 risk to reward ratio all the way to the upside. Okay, at least a 1-to-2 risk to reward ratio. This would give you a good win. So this would be a bullish pennant to the upside if this is in a bullish trend. All right, and on the flip side we have a bearish pennant. All right, we have a bearish pennant. This is a bearish pennant. Bearish pennant looks like this. Okay, this is in a trending market that is trending downwards, a bearish market. So this would be our bearish pennant. All right, this would be our bearish pennant. This is the upper line. All right, this would be the resistance. No, this would be our resistance. Yes, resistance. I don't know if this is our resistance line, and this is our support over here. This would be our support over here. Change that to blue. This would be our support. So this is the price action we are looking at. Price dropped all the way to this point and it started bouncing in between here. Okay, at least forms 2 or 3 touches at least. All right, and then we are anticipating a move to the downside because this is a bearish market. Okay, this is a bearish trend. We are looking to sell. All right, we are looking to sell with this bearish pennant breakout strategy. Okay, so what we are waiting for is a breakout of this pennant. Okay, a breakout of this pennant from a lower price than this one, break out of it and return to retest these areas before we can sell all the way to the downside. That's what we are waiting for. A breakout and then form a lower price. Okay, this would be a lower price here. This would be a lower price. Okay, this price is lower than this one. Okay, is lower than this one. So it has broken out of the pennant. So we wait for a retest here. Okay, our retest here. Wait for a retest here. Wait for a retest there before you can place your sales to all the way to the downside side. Target a 1-to-2 risk to reward ratio. Okay, after you have seen your bearish engulfing candle around here pattern, candlestick pattern, place your stop loss just above the resistance or just inside the pennant right there, but inside the pennant above the support here, above the support or above the resistance lines. Okay, most effective is above the resistance there. Okay, and then hold your trade, okay, at a 1-to-2 risk to reward ratio. All right, wait for a retest. Always wait for a retest before you can take the trade all the way to the downside. This is how you would trade a pennant. Okay, breakout strategy. All right, so we have a rising channel also. We're going to look at a rising channel strategy. All right, we're going to look at rising channel strategy. Okay, but before we go there, I'm going to show you this one of these on the chart. It's bullish. So in a bullish market, this was very bullish. As you can see, it's all moving upward. All right, it's all moving upwards. This is a bullish trend. Okay, this is a bullish trend. So in a bullish trend, when you identify this bullish pennant, you can see here, this is the upper resistance, this is the lower support. All right, so when it breaks out, it broke out around here. You can see a breakout happening here at this spot here. All right, there was a breakout there. So you would wait for your retest, which already happened. It formed a higher price. As you can see, this is the previous price. It formed a higher price. This is the higher price. It formed, you see this candle with a long wick, it formed a higher price, higher than this previous price here. Okay, higher than this previous price here. It's higher here. So we are looking to buy after the retest. So the price dropped, as you can see. The price dropped again. After forming a high price, it dropped with that red candle, retested this upper resistance trend line, okay, of the pennant before shooting all the way upwards. And these are very effective on higher time frames because this could have given you more than 700 pips here. This more than, actually this is almost 1,000 pips to the upside. This almost, it's a 976 pips all the way to the upside. They are very effective for those who are trading long term, and even those who are trading for a few some hours. You can just, any time frame these work, all right, but they are more effective on higher time frames, so take note of that. So this is a bullish pennant demonstrated here. You can see here an illustration here, the first touch here. There are several touches actually here on this support trend line of the bullish pennant. There's another touch here. There are several touches here. And then we have here, up here, we have two touches, major touches here and over there, all right, before we anticipated this breakout. So these are very, very effective, okay? I will not show bearish pennant because it's just the reverse of this in the bearish market, all right? So let me demonstrate to you something else, okay? Rising channel. Rising channel would look something like this. Rising channel would look something like this. All right, a rising channel would look something like that. All right, would look something like that. A rising channel happens in a bearish market, okay, in a bearish market. So you are looking at this in a bearish market, and what you are looking to do is a continuation of the bearish move so that you can sell. You are looking for opportunities to sell in a rising channel chart pattern, okay, especially if it forms on a higher time frame. This is what you're looking at. All right, so you'll see something like this kind of formation, okay. The price begins to move within that channel, okay. Just like with the pennants, you have to see at least 2 or 3 touches, okay, and wait for a breakout. All right, so what you are looking at is this. You are looking at this kind of price action, and then what you are anticipating, so with this also, you'd call this your upper resistance, okay, your resistance of the rising channel. That's the resistance, and then this would be your support here. This will be your support of the rising channel, okay, support line or trend line of the rising channel, okay, chart pattern. So when this happens, you are anticipating a drop below this channel and a retest of that area before you can place your sales all the way to the downside. This is what you are anticipating in this market, and wait for a break below the previous price, okay. It has to be a price lower than the previous one. Let's say this was the price, and now you have formed a new price. This is the new price over here. This would be the new price here. New lower price, okay. That would be the new lower price here, lower than this previous one, lower than this one, okay, before you can place your sales. You place your sell after this retest, okay. You watch out for your bearish engulfing candle to the downside and target a 1 to 2 risk to reward ratio, okay, all the way down here. So this is what you do. This is a retest area. Always wait for a retest of these zones here, okay. Wait for a retest before you can sell. Most likely, when you see a bearish engulfing candle here, a very bearish engulfing candle here, When you see your bearish engulfing candle here, you're going to place your sells all the way to the downside. All right. So this is a rising channel formation and it forms in a bearish market. It's rising, but it's forming in a bearish market. Okay, in a bearish market, and you are anticipating to sell to continue this downtrend. Okay, you want to continue this downtrend. All right, you want to continue the downtrend. All right, so this happens in a downtrend. All right, and you're anticipating to sell. Okay, now the next one we are going to look at is a falling channel. This was the rising channel. The next one is a falling channel. We're going to be looking at a falling channel pattern. That would be our last one. Okay, there is this formation. It's falling. Okay, it's falling, something like that. Okay, it's falling. It's falling. Okay, this is the formation you'll be seeing. This is a falling channel chart pattern. So this is in a bullish trend. It has to be a bullish trend. I'll just type this out for you. It has to be in a bullish market. Bullish trend. It has to be in a bullish trend. All right. This has to happen in a bullish trend. Okay, that means the market is moving upward. The price is rising. All right. Okay, it's in an uptrend, but you have this kind of falling channel forming. All right, you have this kind of channel forming. So what you're anticipating is to buy in this market, in this falling channel formation. You are looking to buy to the upside. So you have in the bullish trend, you have this formation. Okay, when you see this channel forming, you have to have these touches. Remember, it's the same concept. Okay, price has to be falling and forming a channel. And when you draw your upper resistance, this would be the resistance of the channel. Okay, and this would be the support of the channel. This will be the support of the channel. All right. Okay, so we are looking at price breaking above here, sorry. We're looking at price breaking above here, forming a new high price, returning to retest here before we can buy all the way to the upside. This is a falling channel chart pattern. Okay, and it is for those who are looking to buy. So in a formation like this, you are looking at buying. All right, in a formation like this, you are looking at buying. So when it forms a higher price, this is a higher price over here. Okay, higher than this one. It's higher than this previous one. Okay, it's higher. So this is a new price here. This is a new price. This is a new price. Sorry guys, this is a new price over here. Okay, new price. This would be a new price, new high price. All right, here this one is higher than this one. All right, so you wait for the retest before you can place your buys. After if you see like a bullish engulfing candle, okay, a formation like that, okay, if you see a bullish engulfing candle around these areas, all right, if you see a bullish engulfing candle here, you can place your buys all the way to the upside. All right, and target a 1 to 2 risk to reward ratio all the way to the upside. I would place my stop loss just in below the resistance trend line of the falling channel right here. Okay, significant number of pips and target a 1 to 2 risk to reward ratio all the way to the upside here. And that's how you would use this breakout strategy. Breakout because there is a breakout over here. All right, it broke out of this channel and now it is going upwards. It broke out and it has to be in a bullish trending market. All right, so the last one I'll be showing you is on the charts. I'll be showing you the falling channel and the rising channel on the chart. So this is the falling channel in a bullish trend. As you can see, this is a bullish trend. All right, this is a bullish trend. This is a bullish trend, and you have this channel formation here. Okay, you have this channel formation over here. Okay, you have a first touch, at least several touches. You have a touch here. You have a touch here at the resistance, you support. You have another one here, and you have another one here. You have a touch 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 here. So this qualifies. Okay, this is our support over here, and this would be our resistance over here. Okay, that would be our resistance of the falling channel. Okay, so we are looking for a breakout here. So this was this is an uptrend. Price got here and started forming this falling channel. Okay, so it broke out here, formed a higher price, as you can see, formed a higher price. Okay, and then returned to retest this area before you could see this bullish engulfing candle, and price rose all the way to the upside. You can see it very clearly over here. Okay, I'll just make it clear here. So you can see a breakout here, and you can see that price, this is a new price here. New price was formed here. Okay, this is a new price, new high price formed there. Okay, I'm trying to illustrate this as simple as possible. So there's a new price which was formed higher than this previous one, higher than this one here. All right. Okay, so when it broke above that one, we waited for a retest. You see this red candles retested this area, and we saw this bullish engulfing candle. Okay, when we saw this bullish engulfing candle here, you see this bullish engulfing candle over here, this bullish engulfing candle, we place our buys after the bullish engulfing candle, and we place our stop loss just inside the resistance, below the resistance here, and we target a 1 to 2 or even a 1 to 3 or 1 to 4. This one was it moved all the way to the upside. Okay, so in a rising channel, this is what you would see. This is a rising channel formation. This is what you would see. Okay, this is a bearish market. Okay, rising channel has to be in a bearish market. So this is a bearish market. Okay, and we are looking to sell after the breakout from the rising channel. So in the rising channel, we have something like this. Okay, in the real market, I'm just showing you. So this is what you would see with the rising channel. Okay, just want to make sure that you can see that it's a bearish market. Generally on a higher time frame, you have to determine if it's bearish or bullish. So this is in a bearish market. Okay, so you have that rising channel. It's rising, that's why it's called a rising channel. It's going up. Okay, but in a bearish market. So when you have this kind of formation, okay, price was falling, and then when it got here, it started bouncing in between this channel, as you can see, at least 2 touches. Okay, so when we saw that happening, when we see that happening, okay, you have a touch here. Okay, you have a second touch here, you have at least 1 touch here, you have a second touch here, a third touch here, and you have the price in this area. All right, so when it breaks below, what we are anticipating is a break below this support of the rising channel. When it breaks below, we are looking for some retracement to retest these areas before we can sell all the way to the upside. All right, I mean all the way to the downside. So this is what we are looking at here. All right, so if you look closely, you will see that price formed a lower price. So here we will be looking at, sometimes it's really not perfect, but this was a lower price before. So when it broke below here, all right, when it broke below there, below this previous price. So you see this price here, okay? Or even if you traded here, this would be a more perfect trade here, down here, okay? A break below the neckline here, okay? So this was the previous price, and now it has formed a lower price here with this bullish candle here. I mean bearish candle to the downside with a long wick. I would place my sell here. I would wait from all the way up here. Or some people would risk with this three black crows. You can see this. You remember our candlestick patterns, okay? There is this formation here. 1, 2, 3. Your 3 black crows. You would place yourself after the third crow, okay? And target a 1 to 2. Place your stop loss just inside or above this support. Let me just this would be the support. Okay, this would be the support of that rising channel, and this would be the resistance up here of that rising channel. All right. Okay, so I would target a 1 to 2, 1 to 3. Ideal is 1 to 2 risk to reward ratio, and you would win this trade. All right, in a rising channel. This has to happen in a bearish market. This has to happen in a bearish market. All right, this is the rising channel. So this is how you would actually trade this. Okay, trade this in the real market. So take note of that, guys. Thank you very much for those who have watched this video.